I'm getting paid just for having certain investments in my portfolio. That is the power of dividends. And when you reinvest them using the strategy of the DRIP, Dividend Reinvestment Plan, you're not just earning, but you are compounding your wealth automatically. In today's video, we're going to take a look back on my 2024 dividends received in my taxable accounts. I just did a video where I shared a portion of my retirement account that I have invested into FXAIX. Check out that video if you haven't already. But in today's video, it's going to be strictly my taxable accounts because I have goals outside of retirement. And so everything is not invested into a 401k or IRA. So make sure to like, subscribe, and hit that notification bell. So let's get on to the basics of why I focus on dividend paying investments. For me, it's about creating a consistent income stream while growing my portfolio long term. This year, I continue to diversify across investing into Realty Income, which is a REIT, a real estate investment trust, Main Street Capital, which is a business development company, several ETFs, as well as those blue chip stocks that also pay dividends, like Microsoft and Google. I'm not going to go deep into all of the investments, but I am going to highlight a few. Let's start with Main Street Capital. So it's a BDC, which means it provides funding to small and mid-sized businesses. What's great about Main Street Capital is that it pays consistently monthly dividends and even pays out a bonus dividend on the quarter. In 2024, it's been a standout dividend stock, balancing both risk and reward. So year to date, it's up 32.26%. I currently have 38 shares in my portfolio, and I'm going to continue to build into this position. Next, let's take a look at Realty Income. Year to date, they are down 11.72%. Realty Income is known as the monthly paying dividend company. And this year, they have faced some volatility, but as Warren Buffett says, be greedy when others are fearful. So I'm not going to be building into this position. I have others that I want to focus on, but I currently have 106.8 shares. When it comes to Realty Income, I focus on the long-term potential. Its steady dividends and strong real estate portfolio make it a great pick for passive incomes. Now, I want to share a resource with you, which is simplysafedividends.com. You can go on here and take a look at all of the monthly dividend stocks, how they rank, and other details about them. And if we go down and take a look, we will see that Realty Income is number one on the list. It has a dividend yield of 6.0%. It is rated, obviously, safe, and it's had an uninterrupted 56-year dividend streak. They have long-term lease agreements with tenants like FedEx, BJ's, AMC, and Home Depot, for example. And number two on the list is the other company that we just took a look at, Main Street Capital. They have a dividend yield of 5.3%, and they have an uninterrupted 17-year dividend payout streak. So those are the first two. Another monthly paying dividend investment that I have in my portfolio is SPHD. And I also have SCHD, which pays quarterly. And I'm going to share another resource when it comes to those two. This is ETFRC.com. It is an ETF research center. And we're going to take a look at SPHD, which is Invesco's S&P 500 high dividend, low volatility ETF, and SCHD, which is the Schwab US dividend equity ETF. And using the ETF Research Center, you can do research like this, for example, where you can look at the fund overlap of different ETFs that you might be considering. And you can also take a look at how their expenses rank, what sectors you get exposure to, the number of investments in the ETFs, and the top 10 holdings. You can also filter into these different tabs and do additional research. So I do have a little bit of overlap between these two investments, 22%, but I'm okay with that. And they definitely have a different focus. SCHD focuses on high quality dividend paying stocks with a strong track record of growth, while SPHD adds the twist of selecting the 50 S&P 500 stocks with the highest yield and lowest volatility. So you're getting a balance here. With SCHD, it's a bit more aggressive and perfect for growth, while SPHD offers stability and those monthly payments. It's all about finding what fits when it comes to your risk tolerance. So I also have 38 shares of both of those investments in my portfolio. I noticed I had two at 38 shares and one was kind of close. So I figured I would get them all up to 38 shares before we ended the year. Okay, so here's a look at all of the dividends that I received for the month of December 2024. So for growth, I've leaned heavily on investing into ETFs like VOO and VTI in my portfolio. VOO covers the S&P 500, while VTI covers the entire US market, offering exposure to companies with the largest market cap like Google, Meta, Nvidia, for example, all of which pay out dividends. And I want to share, I also hit another milestone when it comes to being a part of the challenge. I just got to 2 shares of MICROSFT in my portfolio, and I did that by being a part of Keenan Grace's last tech stock challenge, which got me started with investing into Microsoft. And I got to those 2 shares by investing $10 at a time. So remember, you don't have to have a lot of money. You just have to be consistent and focus on adding whatever amount of money you have into those high quality stocks. So when it comes to some of these blue chip stocks like Microsoft, it's not about the dividend, it's about the potential of the appreciation. For example, when it comes to Microsoft, Bernstein has just recently raised their price target to $516. Piper Sandler also raised their price target to $520. And taking a look on the MooMoo Investing app, this is compiled from about 14 different analysts. They're giving it an average price target of about 505 and a high price target of 550. So in time, I'm looking to get the growth potential alongside a steady dividend payout. Okay, so now back to the details. Over on MooMoo, I received $64.80. This is for the month of December, and that's from Main Street Capital, Microsoft, Realty Income, SCHD, and SPHD. On the public investing app, that's where I do my $10 daily challenge into VTI. I received $24.24. And then on Webull, I have some ETFs and growth stocks. I received $68.17 from Google, Meta, Nvidia, Realty Income, Target, as well as VOO and VTI, for a total of $157.28 for the month of December. Now on to year to date. So year to date, I received $948, with December being my highest month. Quarter ends are always the higher months. My largest dividend is coming from those 106 shares of Realty Income. I received $322.13, followed by Main Street Capital, which I received $134.65. In addition to that dividend payment, I am also up 41.45% when it comes to my Main Street investment. A few others that I wanted to highlight are VTI, which I have 20 shares over on Webull, and I'm currently up 35.83%, in addition to receiving $70.84 in 2024. And I wanted to share this. Google, I received $13.05, and Target, I received $43.58. When it comes to Target, I am currently down 8.32%. So while I'm waiting for this to turn around, it is nice to get that little extra dividend payment. While Google, I am up 51.51%, but receiving a much smaller dividend payment. So I have 23.16 shares when it comes to Google and 10 shares when it comes to Target. So big or small, these dividend payouts are steps towards me improving my financial outlook. I'm just going to continue to be consistent and focus on my goals. It's important to stay on track, especially when the market does have a pullback. But when you put in the research ahead of time and add good quality investments to your portfolio, then during those hard times, it's easier to wait it out until things improve. I am a long-term investor. I am not rebalancing and selling things on a regular basis. Target might be something that I let go in the near future, but I'm in no rush to do it while I'm currently in the red. But overall, I add things to my portfolio and I'm able to just hold them long term. I'm still in the building phase when it comes to the investments that I shared with you today. And like I said, it is nice to be rewarded for being patient when you do have something in your portfolio that is having a bit of struggle, like a Disney or a Target. Another plus that I have when it comes to my portfolio is diversification. Having those blue chip stocks, ETFs, a mix of investments that are giving me both stability and growth. So make sure to leave me some comments. Let me know, what is your favorite dividend paying investment? Do you use the resources that I shared in today's video? Simply Safe Dividends or the ETF Research Center? Make sure to like, subscribe, hit that notification bell. Check out my referral links for Webull and MooMoo, as well as channel membership. And feel free to let me know if there's any topics that you want me to go into more detail. So looking back to December of 2023, my dividends were $104 and now they're $157. And looking back to year end of 2023, I was at $476 and now I'm at $948. So slow and steady, but I'm going to remain consistent with building up my portfolios. And I'll be here tracking and sharing my journey with you. Thanks for watching. Okay, bye.